Well, you can't live in a vacuum forever. And I think there will be a nice move. I'm pretty certain we'll see above 30. And once we get to 30, 33, there's not a lot of upside resistance. So if we traded in a 33 range for, I don't know, I don't know. I mean, I know markets, but no one's got a perfect crystal ball. I say we trade there 3 weeks a month. We're going to be looking at 40, 50 next year. And I'm not going to say that. I think we're going to get above 30 and I'm going to watch it and give a more accurate analysis, but they can't keep taking physical off the market.
Silver prices are again down to multi-week lows after a strong rally that took the metal near $26 per ounce a few days ago. While this will significantly contribute to the less and less optimistic outlook that is slowly spreading across the precious metal space, experts are still certain that better days are ahead. According to David Morgan, a renowned financial expert and publisher of the Morgan Report, silver will see some reasonable price increases in 2024, spurred by increasing geopolitical tension and increasing doubt about the current conditions of the world's financial system. Morgan firmly believes that silver has retained its place as a major investment asset class, and it continues to gain more relevance due to its almost limitless industrial usage. Despite the constant and blatant suppression of silver prices by commercial banks and other large players, silver is still very popular among investors all over the world. If anything, these past few years have proven the metal's resilience and relevance as both a monetary and industrial asset. Hardly anyone or any asset can go against the powerful players that have been named in connection with spoofing gold and silver prices over the years. JP Morgan, for example, is one of the most powerful financial services firms in the world, with tens of trillions of dollars at its disposal. Unfortunately, a significant part of its massive worth was unethically obtained from manipulating gold and silver prices, a situation that will no doubt continue until the banking system is less strong and influential than it is today. Fortunately, Morgan believes that future is much closer than we think, and when it happens, gold and silver prices will bounce to the upside and finally assume their true value. We will now bring you clips from the interview. But before we do, please like this video, subscribe to the channel, and turn on post notifications for more videos on gold, silver, and other metals. Thanks, and enjoy the video.
But they can't keep taking physical off the market, have all the solar that's coming. You know, the EV market falls into it as well. And there's other arenas that, use a lot of silver. And there's someone out there in the silver space, and he's a bit of a character, and he just jokes about wood preservative. What he doesn't know that I do is that silver was actually it's really good for a wood preservative in a marine environment. So that's if you're making docks and stuff. Also for playgrounds because it's not toxic. So when you have these jungle gyms for the kids made out of wood, if you preserve them with silver, they're healthy. But if you use copper, it's not healthy. And if you did that for all the playgrounds and all the marinas in the world, you'd run out of silver. So it's not going to happen. There's been a few things like that silver has a good application commercially, but it'll never be used because there's basically not enough silver. So he jokes about it like it would be a minuscule amount, but actually, in reality, if it were to occur, and it won't, but if it were, in theory, you'd eat up a ton of silver. It'd be more than solar panels. I think, because it is both money and an essential industrial metal. If you look at what the solar projections are, that's going to take a big whack. And then you see what we already know about the financial system and how fragile it is. I mean, the main thing that kept silver down is that still so much paper out there that covers the people that want to play the market versus the physical market that really should drive the price, which really doesn't because the paper cover ratio is enough. But there is a point of no return when the physical market takes over. And we've seen that happen a couple of times, but it hasn't lasted long enough to really, punch out the silver price. I think that could happen next year because if the institutions come back, that will drive the market. Really, I mean, this sounds conspiratorial, and I don't want it to, but the fact is you haven't seen any institutional participation this year in silver, meaning, 2023. And so then I have to ask the question, well, was someone given the word? Like, don't buy it? Because you go back to 2020, and the institutional investment in silver was like 320 million ounces. We got a pretty good lift in the silver price. So what's different between 2020 and 2023? Well, I'll tell you. What's different is the economy is horrible, and there's more need to be in a safe haven than there's ever been. And yet here's 2020 where you had 300 million ounces bought by institutions, 320 million. And this year, I don't know what it is, probably zero. I mean, I'm being a bit facetious here, but it's not been a high demand. But that doesn't mean that somebody somewhere on the institutional side doesn't say, you know what, I don't give a darn what my instructions are. I run a family office. I run a sovereign wealth fund. I listen to Morgan Report. To hell with it. I'm buying silver, and I'm buying a lot of it because Elon Musk just announced he's buying 2 silver mines this year, or whatever happened. So I'm still bullish. I know I sound like a broken record, but I have called tops, and I have told people to take profits, and I have that record. 3 times I've said take profits, and those 3 times are really advantageous to taking profits. So I'm not a one-way Charlie that it goes up always. It goes up and down, and I know that.
One scenario several experts, from David Morgan to Andy Schechtman, have about the end of silver and gold price suppression involves the complete breakdown of the current financial system. The world's fiat-based debt system is propped up by central banks who consistently debase all currencies and lower their value by printing recklessly every time they run into a challenge. Over the past 5 to 6 decades, central banks like the U.S. Federal Reserve could and did print as much as they wanted. However, that might not be possible for much longer. The United States, for example, now has a 130% debt to GDP ratio. Experts warn that this has been a point of no return for other countries and empires that have fallen from grace. No economy that has reached a 130% debt to GDP ratio has been able to get out of the problem without a nasty default. This is why financial experts and sound money advocates have been warning about the impending collapse of the United States economy. Morgan believes that time is much closer than everyone believes, and when it finally happens, everyone will be rushing towards safe haven assets like gold and silver. According to the publisher of the Morgan Report, savvy institutional investors will be the first to make this realization, and they will rush to invest in both metals. Let's get back to the interview.
Absolutely. I see that the institutions will come back in the market, and that's what's really going to set it off. I mean, if we had a year in 2024 like we had in 2020, where you had over 300 million ounces of silver bought through the ETFs, that would definitely be competing with, again, the industrial demand that doesn't go away. I think the deficit by the Silver Institute's forecast like 238 million ounces or something like that. And there will be a run to gold. And I've already explained this, but I want to do it again. So the run to gold means that, the smartest money buys gold, and then sophisticated money buys gold, and then, institutional money buys gold, and then the last to buy gold is the public. The public is at the top of the parabolic move. And so we've already seen the move by the smartest money, and that's the central banks. They've been buying gold at a rate that's unprecedented for the last 50 years or so. Continued that happened in 2023, so that's a fact. Excuse me, that happened in 2022. So that's a fact in the record book, and it continues this year. So the run to gold, I've used this analogy before, but I again think it should be heard. It starts like a crawl almost, and then it goes to a slow walk, and then it goes to a full walk, and then it goes to a slow jog, and then it goes to a full jog, then it goes to a run, and finally it goes to a sprint. That's how the run to gold begins. So we're in the crawl walk phase right now, where no one's paying a lot of attention to it. Certainly not the public. No, I'm not talking about the few of us that are metals heads. I'm talking about the general public. And then we'll start seeing, some institutions, then some pension funds, and then family offices, sovereign wealth funds, that kind of thing. And you'll see more and more, participation in the gold market across the board. And then, at some point, gold's at, 2,500, 3,000, whenever it is. And the public says, oh my goodness, I thought gold was at 2,000. What happened? And it turns out, wow, I better buy gold. Yeah, the economy's doing this. Wheat prices doubled the last 6 months. Oil prices over $100 a gallon. I can't sell my house because interest rates are too. I mean, all this stuff could come together in a matter of months, and people have a whole different outlook than they have right now, and start making different decisions. And that's to my thinking and my study. I mean, I've looked at these markets for so long, and not that I can't learn more. I always try to learn more. But the general scenario is what I just outlined, Jesse. All those things start to happen is all of a sudden John Q. Public and Jane Q. Public wake up and say, we got to buy gold. We got to buy silver. We got to get out of the stock market. Or we better sell our house at a discount and get to something we can afford. Or, all these things. And it's not normal market activities. It's just normal markets, but we haven't had normal markets. If we had normal markets, the market would have said, hey, we printed up too much money. We got to make a correction. And things would be a lot better than they are right now. Because when this thing starts to unravel, it's going to be interesting.
Morgan believes we are moving away from the current one-world ideology that has the United States and the West at the center of everything, while other countries are pretty much relegated to the sidelines. According to Morgan, that era is dead and buried. Those countries that have been sitting on the sidelines are ready to break free and come into the spotlight to establish their own systems and ensure they have a say in global politics. Morgan says, though he's not certain what role gold will play in this next era, he is fairly certain that it is going to take a more prominent position than it does today. David Morgan is certain that gold and silver are going to take more prominent places in investing and global finance going forward. Do you agree with his assessment? Please drop your comments in the comments section below. Also, ensure you give this video a thumbs up, subscribe to the channel, and check out our other videos. Thanks for watching.